All right, let's go live. We are back. Good morning, everyone. Welcome back to the channel. You're watching the Trading Phoenix, where I trade live every morning in my challenge account, documenting my journey to becoming funded, starting from nothing, becoming funded, becoming profitable, and then eventually going full-time as a day trader here. I am documenting the entire process from now until whenever that happens, as far as becoming profitable and full-time, so that you guys can see the entire process, not just the good and some of the losses that other people put out there, those little shorts and stuff. I want to be able to document the entire thing and leave it on YouTube and wherever, so that everyone can understand the entire process, because there's a lot of middle that is just skipped out there in the internet. And when I was going through all of this and searching through videos and watching other people become successful or already are successful, a lot of the stuff was missing, which gave me this false idea of what day trading was supposed to be like. So I'm here documenting the entire process so that anybody like me can understand all of the middle of the road stuff, which is where people fail. Okay, so my goal here is to give everyone a realistic expectation of what day trading is, so that you can actually succeed, because knowledge is power, and if you know what to expect, then you will have a better chance of being able to succeed. A lot of what is missing is the waiting and the emotional control and the discipline in waiting for your entries. Doesn't matter what strategy you're using. That's going to be something that you're going to see is very different on my channel and in my community that I'm building. Is I'm not going to push any strategy on you. There are lots of strategies out there that work, but where people fail is to be disciplined and patient within that strategy, and that's where success is made. All right, so that's what this channel is. Thank you guys for joining. If you haven't already, please hit that subscribe button for me. I promise you won't be upset. I will always bring you the truth, full transparency, and you guys will see what it's actually like to go through this journey of working full-time at a place that you might hate or just want to change, to becoming profitable and eventually quitting your 9-to-5 and being a full-time trader, so that you can be home with your family or travel the world, whatever it is that you want to do, whatever your why is. So hit that subscribe button for me. In the description below is also a link to my free Discord, where I'm currently building what's going to be the best trading community on Discord. Right now it's free. Anybody who gets in now is going to be free forever, and then whoever joins in the beginning days will have access to I don't know, roles or whatever that nobody else will ever have access to once I change it to a paid Discord. Right now it's free. I'm just starting out, so get in while you can, and help me build out this community that's going to be the best trading community out there, and it's going to be the best trading community that will yield the most successful traders for the future. So let's do it. Let's get in. Let's get in and let's make this happen together. My goal is just to make a community of like-minded people where we can learn and grow together, become successful together, and then turn around and provide that and help other people do the same thing. That's my goal. So welcome. We are about 4 minutes away from market open. A little bit of data this morning, some mortgage applications and mortgage rates. Nothing really has changed. Mortgage applications, big miss from what was expected. The prior was 2.3%. This month we got negative 6.6%, which makes sense. I mean, one, it's winter time. People don't really move you know, December, January, February. Once spring hits, I think those numbers will change a little bit. But also, our 30-year mortgage rate is still sitting at 6.93%. Ew, right? That's disgusting. So the only other thing we have really that may affect the market is at 2 p.m. Yeah, 2 p.m. we have the FOMC minutes for the meeting last month. That sometimes can have a big effect on the market. So that's what we have coming out today. As you'll see on my chart here, I have a large area of imbalance that I plotted out based on larger time frames. If you come over to the 15-minute, you'll see this nice large bullish candle that broke 1, 2, 3 previous structures, leaving behind this beautiful area of imbalance that we are now filling, okay, which aligns with the 1 hour chart. You can see here as well, we have a bullish candle here, a bullish candle here, which broke structure, which left behind an area of imbalance, again, that we are filling. So when the 1 hour and the 15-minute charts align with areas of imbalance, it's very, very strong. So whether this holds or not, you can still use this to decide where we're going today. So if we get some bullish movement out of this area, then you can come to the 1 minute time frame and look for an entry in to go long. If we disrespect this entire area, especially on the larger time frames, then it's a pretty good chance that we're going to end up being bearish today. So we got about a minute 30 left here, and let's see how the market reacts. So we have our lows here for pre-market, which is basically where we filled this area of imbalance. So if we make new lows on market open and we come outside of this area of imbalance here, for me, that's a disrespect, which means you can't trade off of that to go long, right? To stick with the trend. You might be looking at a different direction. Thank you for that like already. Appreciate you. Also, you can see we had this little dump here in the morning, just at pre-market, basically. This is about 8 o'clock. I just want to point out that at 8 o'clock, an article was released by CNBC. Trump suggests 25% tariffs on autos, pharma, and semiconductors that could go even higher. As soon as this article was released at 8 a.m., you come back on the chart over here. This is 7:59 and 8 a.m. These two candles here, we had this sell-off. That's the thing right now, because there is such uncertainty with these tariffs and all this other stuff and Trump's policies. Whether you agree or disagree makes no difference, but the market has uncertainty within it, which means anytime something like this comes out, or he goes out on Truth Social and posts something about tariffs or whatever, the market reacts to it. That's all you need to know. It makes no difference whether you agree or disagree with his policies. If you're a trader, the only thing you need to know, okay, and be cautious of, is that when the term tariffs come out on social or in an article, the market reacts to it. That's for right now. Once we get past this time where these tariffs are either enacted or not, then the market will understand what the outcome will be, and then it'll kind of settle out. Right now, we just the market just doesn't know what the outcome is going to be to these tariffs, if they're going to actually even be implemented. Right now, these are just, you know, threats, I guess, if you want to call it that. So we'll see. That's just something to be aware of, right? Because that is something that affects the market right now. Yesterday, in yesterday's live, I told you guys that I upgraded my mic over the weekend. I realized watching back the live yesterday that the audio was terrible, and I apologize for that. I had the there we go, market open here, guys. I had the levels way too high on the back end, so it was coming out distorted. I hope that I fixed that. I did make a bunch of adjustments yesterday after the live, and I hope that the mic sounds much better today for you. It's mainly because when I listen to the stuff back, I'm a little bit of a perfectionist, and I can't stand what I can hear background noise and you hearing me swallow my water and all that stuff. It irked me. So I'm hoping that today the audio is a little bit better for you. If it is or isn't, or whatever the case may be, do me a favor and just drop a comment so that I can make adjustments for you guys. All right, so we have wicked outside of this area of imbalance here. And for me, even a wick outside of the area of imbalance means that that area is no longer valid to be able to take trades off of. Just take a look at the 15-minute here and see how it looks. Yeah. I mean, if you look, you know, we kind of rolled over today so far in previous sessions, and we are looking like we are heading in a downward direction here. So if you can see here that we did wick outside of this area of imbalance, which will align with the 1 hour also, obviously, which kind of tells me that this area is now invalid, and we have a strong possibility that we will continue to the downside. So I'm going to take this out of play here just so that we don't all get confused. We'll do our normal, you know, wait for the first 15 minutes here, mark out our 15-minute opening range. That helps us decide what direction we're going in today. That's mainly what I use that for. Volatility is up today also. Let's be aware of that. We are at above 100 on the VVIX. That just tells me use caution. You know, that's just a very bright caution sign for me that the market might have some extreme movements today. The nice thing about my strategy is when that occurs, the strategy typically does not leave behind any opportunities for entries. And if you're disciplined and strict with your rules and your strategy, then you're not getting in the market when you have a volatile market. You don't even need to look at anything else. The strategy just plays out that way, which is really nice. I look for imbalances, which is what the market and market makers are looking for, imbalances also, right? To either continue movements or to make movements. But when we have volatility, those areas of imbalance either aren't left behind or they are overtaken all the time. At that point, really, you know, the market makers are looking for stop losses to get liquidity. And that's what happens. All right, a little flip around here. All right, so what we have here now is 1, 2, 3 bullish candles breaking structure. We have not broken these previous highs yet. I'd like to see them break and hold and that means break and close above these highs here. Like I said, we got some volatility in the market this morning, so just be careful, be patient, wait for your strategies to play out. There's no rush here. Yesterday I finished the day break even. My first trade was a red trade. That was my first red trade in the past 2 weeks. And I followed that up with a green trade that yielded a 1-to-1 gain. So that ate up my losses yesterday. So I broke even yesterday. I'm still sitting at a 77% win rate in this account so far, using my strategy and being strict with my rules and waiting for my entries. Right. While we're waiting for our volatility to calm down here, please consider joining my free Discord. Like I said in the beginning of the video, we are building out what's going to be the best trading community on Discord, and you get a lot of things so far. You get daily updates for specific markets. You get a NASDAQ update. You get an S&P update. And I'm actually going to add some more aspects to those updates. You also get one for Bitcoin and Ethereum. I have a market calendar, which leaves a post every morning with what economic events are happening from medium to high impact. So anything medium to high impact for the market will be posted every morning before market opens. I think that's important for everyone to know what news or whatever is coming out. And then I have a channel for news as well that posts articles immediately as they're released. That's how I was able to link up what happened this morning, that sell-off that we got, with that article that CNBC posted at 8 o'clock this morning. And what I do is I have my Discord open and I have the news channel just open while I'm trading, so that you can see everything that comes across while you're trading in real time. I think that's really, really cool. And so if something's happening in the market, instead of going searching for it, it should just pop up right there on the Discord. So it's a couple of cool features that I offer. I'm constantly building out new features. And if you guys are, if you guys have any ideas, or there's something specific that you want in the Discord as well, just hit me up. Let me know, whether it's in the comments here or DM me in Discord. Let me know. My goal is to be able to have our Discord be a one-stop shop for everything any trader needs. I want to have it all in the Discord. As long as the majority of everybody, wants something there, I will work diligently to add it so that you guys have that. All right, we're just waiting, letting this play out here. Let's see, market open is this calendar here. We can start to lay out our 15-minute opening range, which so far goes from here to here. 15 minutes ends there. All right, so there's our 15-minute opening range so far. We got about 3 minutes left to fill this in. Let's see how this plays out. I am thinking my bias so far for today is going to be down. That's kind of how it's playing out. And the fact that we dipped below or through that area of imbalance on the larger time frame kind of tells me that we have some more downside to go. It also aligns with us creating a double top yesterday at all-time highs, so we didn't break and make new all-time highs, and we had a rejection. We kind of came back up to the same area this morning and are getting a rejection again. So I'd say the chances are a little bit better that we're going to continue the rejection and head back down. Doesn't mean that that's what's going to happen. Not financial advice, not any kind of advice, not trading advice, just that's what my thoughts are as of right now. And the thing is, you have to be dynamic just as much as the market is dynamic, right? So your thoughts and your ideas and your plans have to change with the market. Kind of retesting these bottoms here. All right, we're still trading within this 15 minutes here. Here's our last candle to close out our first 15 minutes. So this will solidify the range that we have laid out here so far. can see here that these moves, because we get these large wicks and large candles, there aren't any imbalances left behind. Okay, and so this is what happens. This is the market structure that we get when volatility is increased. So it looks like we're trying to come back and retest these lows here. Community that I'm building, so I'm not going to push any strategy out here. But where people fail is to be disciplined and patient within that strategy, and that's where success is made, right? So that's what this channel is. Thank you guys for joining. If you haven't already, please hit that subscribe button for me. I promise you won't be upset. I will kind of sounds a little distorted still. You have to work on it a little bit more then, I guess. I wonder if it has something to do with eCam. eCam is what I use to actually go live. So I wonder if it has something to do with eCam, because when I record in the system itself and I play back, it sounds good, but it's not sounding good on your end, at least in my opinion. So let's see if I can. Okay, there we go. There's our break in the opening range, the morning opening range here. Open range breakout, the orb, that's a strategy that some people use, and that's what's happening right now. You have your opening range. I use the first 15 minutes. I don't typically make trades off of this. I use it to confirm a direction for the day. But sometimes the setup is just right, and I will take a trade off of it. So let's see what happens today. You got a nice breakout, close below. So what we would be looking for now is a retest of these lows here, and then you can place a trade off of that essentially. Basically sideways trading for the past 2-ish days. Let's take a look at the day chart real quick. Yeah, these last 3 days we really haven't moved. We've opened and closed pretty much at the same price, pretty close. I think we definitely got some downside here. We do have, if you look at the day chart, we do have an area of imbalance here. You know, maybe that's where we're headed today. So the retest isn't quite holding. We got 7 minutes left for the 1 hour and 4 hour candles to close. That might actually tell us a lot for today. It's a good thing this new mic works much better with getting rid of background noise. Otherwise, you guys would have definitely just heard my stomach grumbling. I'm a little hungry. It's time for breakfast. Let's see if we can make something happen here. I should go back. I think I made a comment last week in one of my lives about the 3 pillars of trading. And I wanted to build off of that. I'm eventually going to create a course that's going to be very different from any other trading course out there. It's primarily going to be focused on the mental game. Okay, because that's where it is. All this other stuff, the technical and the strategy and all this stuff, that stuff is easy to be taught and easy to learn. But if you don't know how to implement it, it doesn't matter what strategy you have, you won't be successful. So I will be creating a course eventually, and it is going to focus more on the mental side of trading, which is where success lives. Fear was one of them. Oh, I think it was fear, patience, discipline. Three pillars. Of success, I guess, or of trading. I don't know. I'll have to figure something out there. Yeah. Make a little note there for myself. I'm also going to be. I wasn't expecting any of this to be growing at the rate that it is right now, and so I wasn't really prepared to really do anything other than come on here live and trade. I didn't think anybody would be watching. I didn't think anybody would be subscribing to the channel. My main goal for doing this was really to keep myself in check, because there could be somebody watching, and I wanted to really find a way that would help me stay focused and disciplined in my rules. And a lot of times if somebody's watching, you're better, right? So that was the whole idea of me going live in the first place. And then the channel just started growing, and it's continually growing. So now, I feel like I need to put a little bit more into the YouTube channel. And so I'm going to start creating some other videos that will go into a little bit, in depth a little bit more with what I talk about during the lives, the mental game and the 3 pillars. And, maybe I'll explain my strategy a little bit more in depth. Not that that's something that you have to follow, because each strategy is meant for a certain personality. So you have to find the strategy that works with your personality and your trading style. There's a lot of strategies out there that work. There's not just one golden strategy. There isn't the golden snitch that you can just grab and win the game. It doesn't work like that in trading. But the strategy that I use does work, and it is very easily taught and implemented, so long as you can control your emotions. I have an 80% win rate using my strategy when I stick to my rules. That's the key there. And I can show you that data on in my trading account. The trading account, the prop firm that I use, like many other prop firms, they record everything. They have all your data there, and then they give you statistics from that. So I can show you my statistics and my win rate and loss rate, what my average win and average loss is, and all those things. And right now I'm sitting at just over a 77% win rate. So, like I thought, we do have some continuation to the downside. I do think today is going to be more of a bearish day than it is a bullish day. We got about 30 seconds before these 4-hour and 1-hour candles close, and if I switch over to them while we're closing out here, you can see that we do look bearish. We are kind of sitting on a little bit of a support still, same thing that we hit yesterday. So we could get a bounce here, depending on how strong this is and where it wants to go. But we made new highs here. We came down and we made lower lows from the previous one. We came back up. We made lower highs. So I think the next step is lower lows. So there's your 1-hour and your 4-hour candles, both closed bearish. So let's wait for our entry. Let's look for shorts, right? That's all that means, is you look for shorts versus you look for long positions. And if you can get your bias right, it will increase your chances of your trades being right significantly. It doesn't mean that your bias can't change throughout the day. You have to read the market, because it most certainly can. But right now, my bias is bearish. The market is bearish. Just look at the structure. It's bearish so far, right? And even if you ignore everything prior to pre-market, market open is bearish. So currently the bias is bearish, so we're going to look for short positions. So I will look for my strategy to play out and give me a bearish entry. For me to change my bias on the day, I'd have to see a break above the opening range. Otherwise, everything in between it would still be the bearish bias. We are still at a volatile level as far as the volatility index goes. So just be careful. And you can see that too with the size of the wicks that we're getting. You know, these are stop loss hunters, I call them. These wicks that go in both the directions, candle after candle. They're just picking up all the stop losses. And that's what the market does. So this is the structure that you stay out of, right? You don't trade in something like this. Otherwise, you just continue to lose and your account just continues to go into drawdown. And, you know, that's how you blow accounts. That's how I blew all my accounts. So what we want is the market to pick a direction. We want volatility to decrease. And here we go. Beautiful. That's beautiful. That's a beautiful move there. So we have, I was going to say, we have a break in structure here with this nice bearish candle. The problem is each candle is eating up what would be an imbalance normally if we weren't in a volatile situation. And so this is what I mean by my strategy that I use doesn't leave behind entries when we are in a volatile market. When volatility is increased, you get these big movements, these rapid movements, these larger wicks, larger candles, and each candle just eats up the previous one. So you don't have any areas of imbalance that are left behind for you to even think about an entry. And that's okay, because you don't really want to be trading in a market structure like this anyway. So the fact that this particular strategy leaves you out during market structure like this, it for me is like really cool, right? It's really cool because it saves you, and you don't have to trade every day. You don't have to trade every day. It was a difficult lesson for me to learn over a period of 3 years. You don't have to trade every day, and I don't trade every day. When we have market structure like this turns out to be a day that I don't trade. I'll sit here and I'll wait until about 11:30, 12 o'clock. After 12 o'clock, your volume starts to decrease in the market, and that's when I turn everything off and I walk away. Oh, the S&P closed at a record high. There you go. So we clearly have continuation to the downside, which is what I was saying earlier this morning. Once we broke through that area of imbalance, this is what I'm talking about right here. When you peek through an area of imbalance to the opposite direction that you're trying to use that imbalance in, if that makes sense, the possibility that you're going to have a continuation of that direction is stronger, right? So we peaked, we wicked through, I think it was back here, that area of imbalance that I plotted out on the larger time frames. So for me, that takes that entire area of imbalance out of play, because now I know that the possibility of a continuation in that direction is stronger. And look at this, exactly what's happening here, right? We are playing out exactly what I said earlier in the morning. This strategy is so simple, it's so easy to learn, and it's so easy to implement, and it tells you so much about the market. And I just started using this strategy this year. So we're coming in now into this area of support that that we set. We bounced off of it yesterday. Let's see if today we break through it. If we break through it, we have a very decent amount of downside. Let's take a look at that, because there's nothing here that I'm looking at anyway right now. So on the 4-hour chart, we have this area of support, right? So it was resistance here. It was support here. We broke through. We came back up. It was resistance. We broke through. We came back down and tested. This becomes support again, right? So now we're sitting on the same area of support here. Now the question is do we bounce off again, or do we have enough to continue to the downside? The fact that we are making lower highs kind of tells me that the possibility is slightly stronger, and this is like a 55-45 kind of thing, because you don't know. You don't know how the market's going to react, but the idea that we might have a little bit of a stronger possibility that we will push through this support, especially when volatility is increased. When the VVIX is above 100, that also tells you that your supports and resistances are less likely to hold, okay? And then, so if we do break through this area of support here, look at your downside. You have a run to this area, you have a run to this area, you have a lot of downside. And then in the longer picture, you got to run all the way down to this trend line that is a year strong. So we got a lot of downside versus upside, because what's your upside? Right back to highs, right? That's your upside. So look at your, right? That's how you have to look at this. So the possibility of a downside is stronger than the upside. Not to mention your RR for down is better than up. All right, beautiful. Now we're starting to get a little bit of structure that we can use possibly here. All right, we haven't left anything behind up until this point. Let's see how this candle closes here. This is a nice bearish candle breaking previous structure. We need this candle to close down here, and bearish would be even better. And then I can mark out an area of imbalance if it leaves it. It's not the best because this isn't a bearish candle, but we can mark it out anyway because it is still an area of imbalance. So let's mark this out. So what we're looking for here is price to come back in to fill this area of imbalance. Once it fills the majority of it, that's all I look for, is the majority. Once it fills the majority of it, I look for a bearish candle as my entry. So let's see if we can fill this area of imbalance. Let's see if it'll respect the area, which means it doesn't peek through. And then let's see if we get a bearish candle to give us an entry point with a good RR. My stop loss would be above this area of imbalance to continue to the downside. And because we have a decent amount of downside here, this is definitely a trade that you want to let play out. This could be a really good trade, depending on if we break this support that we're sitting at here. So let's see how this plays out. This is the biggest part of trading right here, is the waiting game. And it may not give me an entry. That's the other part of this, right? So if it doesn't give you an entry, oh well, that's the market. Wait for the next opportunity. Let's take a look at our 15-minute, see if anything was left behind there. You see how these wicks here cross each other or meet each other, so there's no area of imbalance here. Same thing here, no area of imbalance left behind here. And so we really have nothing yet, at least on the larger time frames, but that doesn't mean that you can't use the smaller time frames. All right, let's see if we can fill this area here, but we need it to respect. That's the key. If this breaks above, even if it peaks through or wicks through, then this area of imbalance for me is invalid, and I don't trade off of it. Especially because we're sitting on a support here. So let's see what we get. So I'm just preparing myself here because sometimes these things happen quickly. I risk 1% of my account size. I think this is exactly where my first trade was yesterday, and it ended up not working out because we were sitting on this support, and we ended up running back up. But this is almost a complete fill of this area of imbalance. If this candle closes bearish, technically that's all I need. That's a pretty A+ setup there. I call it maybe a B+ just because we're sitting on this area of imbalance. All right, I'm taking this trade short. So I'm in short. Let's see if we can beat this support here. It's risky. Let's see what the market's got. This might take me out. This is almost exactly how this my first trade yesterday played out. But you got to take the opportunities that are presented to you. Yep, it's exactly the same thing that happened yesterday, man. All right, down 1% on the day. All right, so this area of imbalance is no longer valid, obviously. Hey, Drew. Is it Drew? It's going good. I don't know, did you just see the loss that I just had there? It's a good setup. You got to take the setups, but the market is sitting on a support here, so this is exactly what happened to me yesterday that took me out yesterday. So, but we'll get it back. Just wait for the next opportunity. So if we are going to be maintaining support here, yesterday we ran right back up to previous highs of the day, so, but I'm not convinced yet. We'll see. Volatility is starting to come down a little bit. I'd like it to come down much more. I really wanted to finish phase 1 this week of my challenge. Some weeks are just slower than others. You know, when you get volatility, when you get articles in the morning talking about tariffs, you know, sets the market out. Drew, I use Trade Locker, and I use that because that's what the prop firm utilizes. The prop firm is Funder Pro. You can use the link in my description for that if you guys are interested. Trade Locker is actually a really good platform. I like it a lot. It's very similar to TradingView. They actually use TradingView's charts. It's a nice platform, both on the desktop and mobile. And they're constantly, every Sunday actually, they shut down the platform in the early hours to update it. So they're constantly working on it, constantly making it better. And they, it's a good platform. The only thing I don't like about it is I like to use multiple windows to have different time frames up, and they haven't gotten that yet. Hey Kevin, but they have said that that it is on their list, just not on the top of their list, which makes sense. I mean, they got other things going on. But Trade Locker is a good platform. It's very simple to use. Kevin, what method, you mean what strategy am I using? If you're asking about my strategy, I use it. It's a very simplified form of ICT, I guess. I just look for areas of imbalance that are left behind. I wait for those areas to be filled, and then I look for entries based off of that. And I trade with the trend, obviously. You could use the same areas of imbalance for inverse, I guess. I haven't really tested that out yet. I did make one trade using an inverse area. It did end up working out for me, but I'd like to back test it a little bit more. So right now I just stick with the trend and I wait for the market to leave me in balances. And that's what I look for. So if you weren't watching before, I just made a trade a few minutes ago based off this area of imbalance here. Right? So I wait for price to come back in. I wait for it to fill the majority of it anyway, and I look for a bearish candle, and then I take my trade off of that. Unfortunately, it's only an 80% win rate. That's when I say unfortunately, like that's not unfortunate. It's a good strategy to follow, and it just didn't work out this time. And it's probably because we're sitting on the same support that we were sitting on yesterday as well. And I actually played this out yesterday, almost exactly the same, and the same thing happened to me. Drew, I've been trading for technically 3 years. The first 2 years, I've been kind of playing around with it. Last year, 2024, I made a goal in the beginning of the year to take trading serious. And so I traded every day, and I treated it more like a business than just kind of on and off. So whatever you want to say, either a year or 3 years. I've been trading very seriously for just over a year. This particular strategy, I've only started using this year. I used last year a couple different strategies, and they just didn't work out for me. This particular one, I learned, it's really easy to learn. And I spent a lot of time back testing it. And when I say back testing, I actually go back into replay on TradingView. And I just trade it as we're going through replay. And it turned out to be an 80% win rate for me. So I started using it live this year. And I'm sitting at a 77% win rate in this challenge account right now. So it's a good strategy. And it's very simple. So we're still sitting in this support area here. Yeah, Kevin, that's the problem. That's part of the reason why I started doing my lives is there are a ton of strategies out there, and everybody claims that their strategy is the strategy. I'll give you a piece of advice. There's no such thing as the strategy. And there are a lot of strategies that do work, but they're personality based. One strategy for one person, may not work for the next person because their personalities are different. So the hard thing is finding the strategy that works for you, one that you are comfortable and trust. That's the thing, is you have to trust your strategy. Otherwise, you're going to be afraid to make trades. So I would suggest picking one strategy, something that you feel comfortable with, and back test the crap out of it. And if it doesn't work for you, then move on to another strategy and back test that one. Find one that works for you and your personality, and then use that one. Just stick with one strategy. That's it. One strategy and one instrument. Try to stick with one instrument. Don't trade all kinds of different things, right? But good luck to you, and I'm glad that you're here. What are the requirements for passing the challenge? This particular challenge is a $100,000 challenge. It's just one of their regular challenges that they call it. They have different ones. The requirement is phase 1 is 10%. With a 45% consistency rule. That just means that I can't make more than $4,500 in a day. So 4.5% in a day. Phase 2 then is 8%. And then once you pass phase 1 and phase 2, you get a live account and you're funded at that point. And then there is no consistency rule. You can make as much as you want. Daily total loss is 5% of your account. And then your total loss altogether is 10% of your account. There's no trailing drawdown with Funder Pro, which is really nice. You have just a daily set and a total set. They just open up a futures part of their business as well. And same thing, there's no trailing drawdown, which is really nice. They have 3 different types of accounts, and anywhere from, I think, 5,000 maybe all the way up to 200,000. And then you can scale your account up to Funder Pro is another kind of newer prop firm. They're really, really good. I like them a lot. They're both Funder Pro and Trade Locker are very, very active with their community. You can join their Discords, and they are always on, always updating, always adding new things. Funder Pro's customer service is top notch. If something happens, if there's a glitch or whatever, you can do a ticket. They'll investigate it quickly, and then they'll refund your money or your account, whatever the case may be. They're not trying to take advantage of anybody, which is really nice. Yeah, Kevin, I hear what you're saying, but that's not what ends up happening. I used to use all those indicators too, and the problem is all of them are lagging, which is why you don't see anything on my chart anymore. I used to have moving averages and, you know, profile volumes and all this other stuff. I'll be honest with you, this particular strategy for me is the only thing that has ever actually been consistent for me. Pick one strategy. That's my advice to you. So if you want to use moving averages, then pick a strategy that just uses moving averages, okay? Like crossing averages or whatever you want to do. You'll have more success with just using one strategy. Once you become successful and consistent, then you can start to add other things in, but you want to be consistent first. You want to have that success first, and then you can start adding other things in. Otherwise, it just gets too confusing, and it leads to fear of making trades. All right. Oh yeah, for sure. Sorry about that. Is that better? How's the audio now, Kevin? All right, thanks for that. I appreciate that. So yeah, try to stick with one strategy in the beginning. Once you become consistent and profitable with that one strategy, and you know you have something you can rely on, then you can kind of add other things in. And then, yes, you can hone in at that point on becoming more consistent, but you got to find that consistency first. Well, when I say lagging, even in live market, right? The moving averages don't create themselves until the candles are finished. So you're better off learning price action, candle structure, not so much patterns, just price action, and then using that price action with whatever strategy you decide to use. You know, so when I say, like, I look for a bearish candle, in my strategy, I need to know what a bearish candle is. It has nothing to do with any other indicator or anything like that, right? Because if I play out my strategy, but I don't ever get a bearish candle after the zone was filled, then there's no entry for me. So you're better off learning candle structure and price action because that's going to be more stable for you in the long run in this game. Oh, no problem. Hey, where are you from, Kevin? Yeah, so a lot of people use Fibonacci. I'm not good with Fibonacci, so I'm not one to ask. I'm not even going to try because I don't want to BS you. I do know that a lot of people use Fibonacci though. So we actually look like we might be forming a reversal here. So it does look like we are bouncing off of that same support that we bounced off of yesterday. Indonesia, nice. Well, hey, I'm glad my video made it all the way out there. Thanks for being here, by the way. Appreciate you watching. Appreciate the questions. Yeah, see, this is what we call volatility. When the market cannot pick a direction. We're still making higher highs and higher lows. We are coming off of this support zone down here. So let's see, this is just, this is where you wait now. You wait for confirmation, and then you can look for an entry based off of your strategy. What I would really like to see for confirmation is a break above the morning highs, which is right here. That would kind of give me confirmation that we are switching directions completely, and then you can look for an entry long. The problem with getting in anywhere in between the lows and the highs today is that this market, especially with volatility being increased, can go in any direction. And with these large candle movements that are leaving behind these wicks, your stop losses are just going to get taken out. Oh wow, which course did you get? What did you go through? Yeah, it could definitely be stressful. A lot of these courses, they definitely do go through the basics, but I feel like they leave a lot out. And like I said before, I don't know if you were here already, I will be designing a course of my own eventually, but my course is going to be very different than any other course because this is a mental game. It's easy to learn a strategy. It's not easy to teach your brain and your emotions to trade. And so my goal is to build a course that's more based on the mental side of this, because that's where success is made. I do percentage. I risk 1% of my account to look for a minimum of a 2% gain. So 2 to 1 is my minimum. If I plan out my trade and I don't see at least a 2 to 1, then I won't take it. So everything for me is percentage based. Oh man, sorry about that. Yeah, there's a lot of scammers out there, man. A lot of them, unfortunately. And it's hard to see through all the baloney. $500 for ICT. That's probably your best bet. Just simplify it. I don't know what's in that course, but just simplify it. The market isn't, what's the word I'm looking for? It's not difficult. It's more simple than everybody makes it out to be. So just learn the ICT. I believe that would be a good shot for you. Just simplify it. That's what I did. And when I say area of imbalance, that's what ICT calls fair value gap. It's the same thing. Fair value gap, area of imbalance. It's really an imbalance. And that's what market makers are looking for, is to balance the imbalance in the market, right? That's their whole job. And they use those areas to gain leverage to either continue a move or to create a move. So the other one there, time trading, predict price with moon and planetary system. Good luck with that, but I don't know. I'm just being honest with you. All right. You know, what's interesting is today is playing out almost exactly the same way that yesterday played out, where we went from highs down to the support, and then we traded sideways the rest of the day. We're kind of looking like it's setting up to be the same thing. See, we started off up here, we came up here, we dumped down to this support, and we slowly moved back up. Sideways movement, same thing today, down to the support, and now are we gonna just continue to roll back up and continue sideways? I mean, it makes sense that we would consolidate up at these highs here, because we are at all-time highs, right? Here's all-time highs of the NAS100. I'm pretty sure the S&P actually closed yesterday making new all-time highs. We peaked above all-time highs here, but we did not close above all-time highs. So it would make sense that we'd get some consolidation here. I would think that we'd get a little bit of a pullback, especially into this area here on the day chart. This is an area of imbalance here, before continuing up or using that to come to the downside. I think a lot of what's happening here is the news and the tariffs and all this other baloney. So pretty much just a waiting game now. This is the hard part. This is where a lot of people try to force trades, and then step out of their strategy and their rules to create trades that don't exist, and then they end up getting stopped out and all this other stuff. This is all stuff that I did in the past 3 years. So I talk from experience, not out of my butt. Those are the things that I did. I'd get bored because the market's not giving me what I want, and then I would look for excuses to get into the market instead of looking for excuses to stay out of the market. And if you can switch your mindset to that, what are the reasons to not take this trade, you'll be way more successful. Once I started doing that, that's when my win rate increased dramatically. Ask yourself why you shouldn't take this trade. You know what I forgot too? Today we have the FOMC minutes comes out at 2. It just popped back into my head. So you know what's going to happen is we're going to trade sideways here until those minutes come out, and then the market will make its move. I would almost, if I was a betting man, which I'm not, I would say that we're probably going to make some sideways movements here until 2 p.m. when the FOMC minutes come out. So I'm not trading for a living yet. I trade every single day, but I still work a 9 to 5. My goal is to, by the end of this year, quit my 9 to 5. As far as what I make a month, this month so far, I am up 3% on my account. I was up 4%, but I lost 1% this morning. It is what it is. I make about probably an average of 2% a week, but then some weeks, you know, you lose a little bit. So, yeah. Right now, I'm up 3% for this month. Let's see if the market has enough to break these highs here. We're still making higher lows. You can see we have a different trend here now. If you marked out this trend here, you can see that we broke that, obviously, retested, and now we're continuing. So we have a new trend here. If we can break above and maintain past this structure here, this would be a pretty good reversal. But for me, I like really strong confirmation. So I would love to see a break above the morning highs. Yeah, thanks, Kevin. That's the goal. Right now, my goal is to small wins, consistency with winning. I don't actually really care about how much I win right now. I just want to maintain the consistency of winning. The first 2 weeks of this month, all right, what day is it? Yeah, the first 2 weeks of this month, I had no red trades. This week actually were my first 2 red trades for the month. And that's, you know, really I took a chance on taking these long positions, or short positions, sorry, off of this this support here. So that's on me, but my strategy played out, so I can't be mad at these. You're gonna have red trades, right? So the consistency is definitely there. So for me right now, I'm just looking for consistency. I don't even care if it's a 1-to-1 trade. I take the 1-to-1 trade. I'm just looking to build consistency and to build trust in my strategy. Yeah. I totally get that, man. That's how I started too. Constantly on your mind, and I did really well too. I actually started off scalping, so I made a ton, but it's not sustainable. That's the problem. So right now, for me, my whole mindset has changed, where I don't care how long it takes me to become profitable. I know that this is not a get-rich-quick thing. If you want it to be sustainable, right? It can be. People get lucky, but it's not sustainable. This is something that I want to be able to do for the rest of my life. And I want to be able to quit my 9 to 5 and not have to worry about having to go back. So for me, it's really nailing down small wins, becoming consistent, and then I can grow from there. Because really it's just percentage, right? So if you start off with a $100,000 account and you make 2% a day, give or take, some days are reds, right? But if you make 2% a day, when you scale that account to $200,000, you're not changing anything, but your gains are bigger. So that's how you have to look at it. You risk 1% of your account to make 2%, okay? And if you can maintain that, you grow your account, you scale your account, and now your 1% risk is bigger, which means your 2% gain is bigger, until you get to an account size that maintains the life that you want to live. So you're not trying to change the amount that you're trading. You're trying to, in the sense that you're growing your account, right? You should never risk more than 1% of your account, period. That's like the golden rule in trading. So you don't want to risk more than 1% of your account, which means the idea is to grow your account, which means your strategy doesn't change. How many pips you're looking for doesn't change. None of that changes. It's just the amount that you're trading based on your account size. And that's how you grow down the road. So for me right now, I'm looking for a 2% win a day. That's it. If I hit my 2% goal, I walk away. And so if I can maintain that consistency, when I scale my account to the next size up, I just doubled my income without changing anything, right? All right, we are reaching for market open highs here. So this will be the area that we're looking to see whether we bounce off of that or we break through it. Volatility is still sitting right at 100, and that 100 on the VVIX is like, once you hit 100 or above, you're in a volatile market. That's use caution, right? And as you can see here, there is nothing left behind here as far as imbalances that I can use. That's what happens with a volatile market structure. If we're not volatile and we're below 100 and hopefully well below 100, then you get areas of imbalance, left and right. You get way more opportunities. That's right, Kevin. Yep. Bigger account, bigger money. Stick to a 2-to-1. 1% of your account risk to gain 2%. You become successful with that and consistent, then you can, then you can go 3-to-1 or 4-to-1. But it's just easier to grow your account size, and then nothing else changes. You know that works for you. You're already fighting with AI Trader, man. The majority of what's happening in the market, especially with big money, is all algorithm and AI. So yeah, for sure, it's already happening now. We little traders mean nothing to the market. The idea for us is to find the same direction that those algorithms and AIs are trading and try to catch a ride. That's all we're trying. That's all us little traders are trying to do. Try to catch the same train that the big money is on. If you can figure that out, then you'll be successful. So at this point here, I'm waiting for the market to retest market open highs, which is right here, this level right here. And then we'll see if we're going to get a rejection there or if we're going to break through it. And then honestly, we're getting to the time of the market where things start to slow down. And I don't really sit here past 12 o'clock. If nothing happens before 11:30, 12 o'clock, then I walk away because after that, market volume really starts to decrease. Yeah, for sure. Once you become professional and you really can see, market structure and you know how far whatever instrument you're trading can move in a day, yeah, you can make goals like that. I trade the NASDAQ and I don't trade anything more than the NASDAQ. So for me to, and I know that the NASDAQ doesn't make huge moves in a day, right? So for me to ask the NASDAQ to give me an 8-to-1 or a 15-to-1 is just not realistic. There are instruments that can move that way. I stick with the NASDAQ. And so I know that asking for a 2-to-1 is absolutely doable. A 3-to-1, maybe on some days. A 4-to-1 is pushing it. So it depends on the instrument that you're trading. I'm from the US, yeah. I trade the New York session. I like trading the NASDAQ because I'm a fan of technology. So I already kind of enjoy keeping up with technology news, and the NASDAQ is built of mostly technology stocks. So when you have the big hitters like Tesla and Nvidia, and all those, Apple, Google, all of those, that's what moves the NASDAQ. So for me, I have a better feel on how the market is going to move. But again, it's the same thing as picking a strategy. You got to pick an instrument that works for you. Some people only trade gold. Some people do Forex. I tried Forex. Not for me. I tried crypto. Not for me. The NASDAQ, I'm very, very comfortable with understanding the movements that the NASDAQ can make, which makes a big difference because then I make realistic goals. All right, Kevin. Hey, nice talking to you. Thank you very much, and hopefully I'll see you tomorrow. All right. Honestly, I'm probably going to get going too soon here because the market's not doing anything. I really do think that we're just going to get some sideways movement in between these two levels here, highs and lows of market open, until we get that FOMC minutes report at 2 p.m. You might get some movement then, but I think that's what the market's waiting for. Definitely getting some bearish movement here, but again, where are we headed? Back down to the lows? Who knows? Anything in between here now is risky trade, which is unfortunate. So I'll be ending the day red today. It's actually be my first red close day in 2.5 weeks. It is what it is. We're actually leaving some huge imbalances here. I might stick around for a little bit. So you can call this your break-in structure. Actually have a gap here. It's very bearish. Another very strong bearish candle following. You got all of this is an imbalance here. Look at that. On the 15-minute, you got this candle here. It's completely eating up the previous candle. That's very bearish. If it closes there, you got a complete overtake of the previous candle on the 15-minute. Your 1 hour candle looks like it wants to close right at the same place that we closed yesterday. So we're just sitting on the support here. Yeah. Oh man. It's just one of those days, you know? Just one of those days. Yeah, we're getting support here still. Let's zoom this out and let's see what we look like on the larger time frames. Sometimes I like to zoom out and maybe trade the larger time frames. Gives you a little bit of a better idea. We're still in a downtrend as far as the day goes, even based off of previous sessions. I mean, really, we want to look for a retrace all the way up to there. Volatile, choppy market. Oh. Just more confirmation of volatile market here. And that's just, it's exactly what we're going to get, honestly, until those FOMC minutes come out, I think. So not an environment to trade in. I'm already down 1% today, so there's no point in me getting back in unless I have a very, very clear picture of a direction. This will be my first red day in 2.5 weeks. So it's not bad. I'm not mad at it. Up 4% total, down 1% today. That's okay. Yeah, this is the market structure that I stay away from, for sure. All right, everyone. I think I'm going to call it a day for today on the live. Keep watching the market a little bit longer, but I don't think that we're going to get much for more opportunity today. At least not before the FOMC minutes comes out, and then you'll get some volatility then as well. So, hey, appreciate all of you. Thank you guys for watching. Thank you for those who chatted with me today. Really appreciate that. Makes these lives go a little bit better, right? A little bit more to talk about. Appreciate that. Let's continue to grow the channel together. I appreciate all of you that have subscribed already. If this is your first time watching, please consider subscribing to the channel. Welcome to the community. Don't forget to join the free Discord as well. Link is in the description down below. And with all that being said, I will see all of you first thing tomorrow morning. Have a great day, everyone.